Does that hit the list of your paranoia at all?
Look, I think there's a lot of virtues to the rise and depth of the private markets in the United States. You have a tremendous number of mid-sized companies or even large companies owned by private equity firms, and you have very tight agency between the owner of the business and the management of the business. That's been very instrumental in increasing American productivity. I think that's the great strength of the private equity system that we have in the United States. The downside in private markets, one of the downsides is you don't have good price discovery. And price discovery is one of the ways that you, as a management team, have an appreciation for how the world values what you're doing, and that investors are able to use as a metric or milestone in measuring their own skills as an investor. You know, one of my concerns with private credit, for example, the vast majority of companies will never default. You invest your money today in a company's credit, you won't know for 5 or 7 years if you made a good investment, which means that a substantial portion of your career will have slipped through your fingers before you learn whether or not you made a good underwriting decision. And as we go back to the start of the story, one of the distinguishing factors of the American success story is the depth and efficiency of our capital markets. And as we move more into the private realm, we take away some of the learning experiences that have driven the vitality and success